2019, a company that rented office space was valued at $47 billion. Not a technology company, not a pharmaceutical breakthrough, not an artificial intelligence revolution. A company that signed long-term leases on buildings and rented desks to startups, valued at $47 billion. Within 12 months, that valuation had collapsed to less than $3 billion. The CEO had been forced out, the IPO had been canceled, and thousands of employees had lost their jobs. WeWork is not just a business failure. It is the most revealing case study of how charisma, vision, and unlimited money can build an empire worth nothing, and how the smartest investors in the world can be completely fooled by a man who believed his own delusions. Stay with me, because everything you are about to hear actually happened. To understand WeWork, you need to understand its founder, Adam Neumann. Born in Israel in 1979, Neumann came to America with ambition, charisma, and very little else. He tried several business ideas before landing on a simple concept. Take long-term commercial real estate leases, divide the space into smaller units, rent those units short-term to startups and freelancers at a premium. It was not a new idea. Serviced offices had existed for decades, but Neumann had something others didn't: a story. WeWork was not a real estate company. It was a community, a movement, a way of elevating the world's consciousness through work. He told this story with such conviction and such energy that sophisticated investors suspended their disbelief and wrote enormous checks. SoftBank alone invested $18 billion, the largest single investment in a private company in history. And it was all based on a story that had no financial foundation whatsoever. Let's talk about the numbers, because the numbers were always the problem that nobody wanted to see. In 2018, WeWork generated $1.8 billion in revenue. It lost $1.9 billion. It was spending more money than it was making, every single year, getting worse every year, and growing faster every year. The business model had a fundamental flaw that any first-year economics student could identify. WeWork signed long-term leases, 10 to 15 years, at fixed costs. WeWork rented to customers on short-term contracts, month to month. In a recession, customers cancel month-to-month contracts immediately. But WeWork still owes 10 years of lease payments. The entire business was a massive bet that the economy would never have a downturn, that customers would always stay, that costs would always be covered. It was not a technology company with scalable margins. Every new location required massive upfront investment. Growth made the losses bigger, not smaller. But nobody wanted to hear this, because Adam Neumann had a story, and the story was more compelling than the spreadsheet. Now let's talk about Adam Neumann personally, because WeWork's story is inseparable from his behavior. He trademarked the word "we" and charged WeWork $6 million to use it, his own company, paying him personally for a word. He took out hundreds of millions in loans against his WeWork shares and used the money to buy properties, which he then leased back to WeWork at a profit. His own company was paying him rent. He had a private jet. He traveled with a personal entourage. He held ceremonies where employees were given tequila shots and told they were changing the world. He talked about becoming the world's first trillionaire, about becoming the Prime Minister of Israel, about living forever. And SoftBank kept writing checks, because Neumann had convinced them that his vision was worth any price. The actual business was hemorrhaging money. The actual leases were creating catastrophic long-term liabilities. The actual employees were working for a company that was fundamentally insolvent. But the story was incredible. The collapse began when WeWork filed for its IPO in 2019. For the first time, the general public could read the actual numbers, the actual losses, the actual conflicts of interest, the actual risk profile of the business. The reaction was immediate and brutal. Analysts called it one of the most problematic IPO filings ever seen. The valuation was absurd. The governance was a disaster. The losses were unsustainable. Within weeks, the IPO was canceled. The valuation collapsed from $47 billion to under $10 billion almost overnight. SoftBank, which had invested $18 billion, was now facing catastrophic losses. They forced Neumann out as CEO. But to get him to leave, they paid him a $1.7 billion exit package. The man who had driven his company to the edge of bankruptcy was paid $1.7 billion to leave. Thousands of employees were laid off. They received nothing. WeWork limped on for several more years before finally filing for bankruptcy in 2023. The company that was worth $47 billion filed for bankruptcy with almost nothing left. Here is the financial autopsy of WeWork that reveals the real lessons. SoftBank invested $18 billion and lost most of it. Employees who received stock options as compensation lost everything. Early investors who got in at reasonable valuations made money. Late investors who bought the story lost everything. The pattern is consistent with every bubble in financial history. Early believers profit. Late believers pay for the party. WeWork's story is also the story of what happens when money is too cheap. In the era of zero interest rates, investors were desperate for returns. SoftBank had $100 billion to invest. It needed to put that money somewhere. And Neumann's story was more exciting than treasury bonds. When money is cheap, people take risks they would never take otherwise. They fund companies that lose money indefinitely. They believe valuations that have no mathematical basis. They ignore the spreadsheet because the story is better. WeWork could only exist in a world of free money. When rates rose and money became expensive, the story stopped being enough. Here is what WeWork teaches us about money, charisma, and the dangerous gap between story and reality. Lesson 1. Revenue is not the same as profit. WeWork had $1.8 billion in revenue and was still bankrupt. Always ask how much a business actually keeps. Lesson 2. Valuation is not the same as value. A $47 billion valuation is an opinion, not a fact, and opinions can change overnight. Lesson 3. Charisma is not competence. Adam Neumann was one of the most compelling people in a room anyone had ever met. He was also running a company into the ground while paying himself hundreds of millions. Lesson 4. When the smartest money in the world ignores obvious problems, ask why. SoftBank knew the numbers were bad. They invested anyway because they feared missing out more than they feared losing. Fear of missing out is one of the most expensive emotions in finance. It has destroyed more wealth than any market crash in history. Lesson 5. If a company cannot explain simply how it makes money, it probably doesn't. WeWork could not explain it. $47 billion later, the world found out why. Subscribe to Financial Protocol on YouTube. Every week we expose the collapses, the frauds, and the systems that determine who builds wealth and who loses it. New cases every week.